So, Urs, we're back at the Swiss View here. A little bit of a new set, not in the office anymore, but glad to be here today. I think what we should talk about is we're 1 month into the year, and the European markets have outperformed the U.S. markets so far. Maybe you could give just a little bit of a picture of what we've been seeing at the start of 2025.
Yeah, there are a couple of exciting points. So the outperformance of the European markets, I mean, if you go back to 2024, obviously the European market's still lagging the US market, but the start was really positive. You could see how European markets are catching up. The performance was almost double than what the US markets have shown. And according to Bank of America, there was the biggest allocation to European equities in January seen within the last 25 years. And that gives us a lot of optimism and also like a good outlook for the European market, that there is enough support. It's not just like a quick rally where there was some catch up, but it was really, there is money flowing actually in an valued market as the European one.
Yeah, I think that's something that we've been talking about now for, it feels like way too long, but talking about the difference between the valuations in the US of companies and the valuations of European companies. And I mean, especially we talked about how much capital flowed into the US market in 2024. And now we start to see, seemingly looks like institutional investors reallocating to Europe, where there's good, attractive options to be invested in.
Yeah, it was not only 2024, it already started back in 2020.
Sure.
After the COVID lockdowns. There was so much allocation, so much inflow of money into the US market, and it didn't seem to stop. And there was something we covered in past episodes already, that such a trend can go on for much longer than what you would anticipate. And I think there also the saying comes that markets can stay irrational for much longer than you can stay liquid.
I like that. That's a nice one. I think also what's interesting to see is, one, the good opportunities, but that you have to kind of assess, okay, what are the opportunities and the risk factors of the European market in general. And I think we see a lot of still optimism in the States, even though it's declining. I think the recent consumer confidence in the US was 5 points under what they were expecting. They were expecting to go up again, and actually came down below where it was, which is interesting to see. It's still a very positive outlook for the U.S. economy, but you see that a trend has shifted there in the U.S. economy, with a lot of volatility happening, where in Europe, there's rumblings of governments kind of shifting a little bit from what have brought us to where we are today, which is usually a lot of regulation and a push there. And now there kind of seems to be this feeling in the European areas that, hey, there might be a bit of a shift. I mean, we saw it in France. We're going to see Germany and their elections coming up here soon. And, there are some opportunities, there are some repositioning, but what are kind of some of the risks that you see as well?
Yeah, obviously, to every good story, there are certain risks. And for Europe, it's certainly the war in the Ukraine. I mean, it's still ongoing. It's there for 3 years now. And the hope is there that it will unveil, that there will be a solution to it. But if that isn't the case, or if it even starts to heat up again, that can cause much more uncertainty. And then on the other hand, we are having, as you said, we're having the election of the new chancellor in Germany. So far, it looks that there will be more security coming in once we have a decision where we see who is coming in. But dependent on who is coming in, who wins the election, there can also be more uncertainty caused. And then we have other governments, France, as you mentioned. We have Austria, where there's some like back and forth. Then we have Great Britain, where they are still having some struggles, where they also have some famous U.S. politicians raising their voice what their favorite outcome would be. And I don't want to like evaluate that, but it definitely has an impact.
Yeah, absolutely. And in a world where we see information hot off the press affects things quickly. I mean, this is what
Right.
we saw with the US markets with DeepSeek.
Yeah.
Comes out, the information is, hey, they've developed a better AI with a less better technology, but it's a better functioning product, and they did it for way cheaper than we did.
I think the last point was exactly the critical one, that
Yeah.
the spending on the development was much less. Also, I mean, we have read after that this announcement is highly questionable, whether how much really was invested, how much this 6 million that was claimed someone in the beginning, whether this was really just the last finish or whether there has been much more investments before.
Yeah, absolutely. But also that effect, what did, when you look at the US market, what did it do? It caused a shock where NVIDIA lost 600 billion
Market cap.
market cap in a day, essentially.
Right.
And I think one of the points there is that we see these valuations are very stretched. We see the people chasing the momentum, chasing the upward. Not that the company itself is bad or what they're doing is not going to be sustainable, but that investors realize, hey, I'm paying a lot for this investment, but I want the momentum. But the moment something comes out, and as you said, there was information that came out later where they say, hey, maybe not everything they said about DeepSeek holds up.
Right.
In terms of how much they spent on it.
Yeah.
But it still caused disruption. And part of that is, okay, there were this overstretched evaluation. And it's not that can't happen anywhere in the world in terms of investing, but it does show this kind of volatile reaction to, things might not be as good as they looked.
Yeah, and I mean, we have seen and mentioned in the past that the valuations in the US are in certain aspects even higher than they used to be back in 2001 when the dot-com bubble broke. And as you said, people are riding the wave, people are staying invested, but they are very well aware that the valuation is so high. So whenever there is anything coming up that questions this valuation, no one wants to be the last one selling. And this causes this kind of reactions.
Yeah, I think that's a really, really good point. I think on that, we also... speaking of all-time highs or highs,
Right.
gold hit 2,900.
Right.
Never hit that before, ever. This is kind of unprecedented time. Those who have held gold over the past 30 years and held on to it, it's paying off. But you brought up a very interesting point. We were talking about this week about where the gold was going in terms of flow of what country to what country.
I mean, a lot of the price setting in the gold sector or area is done by futures. But right now there is a lot of physical gold going from London to New York. And it already started at the end of last year because there is some fear that there will be tariffs on gold in the future. And so it really causes some issues to physically move the gold to New York, because not only it is the way they have to go, but it is also that they in some cases they have to change the weight of the gold. So it oftentimes goes to Switzerland first, gets melted in, then reproduced or redone into ounces or smaller parts, and then it goes to New York.
Yeah, and that adds obviously a cost to it. And I think what's interesting there is retail buyers of gold have very little effect on the movement of gold's price.
Right.
Not zero,
Yeah.
but less. And when you look at it from an asset of whether I'm an institution or let's say a central bank, I'm less concerned about its spot price.
Yeah.
And I'm more concerned about having a physical asset on my books so that whatever happens, I've got this physical asset. And I think that's also something that has to be considered. I mean, I think, a good question when things ever hit high is, am I too late to buy it? Should I buy it now? Is there more momentum? What are your kind of thoughts on that?
I think that it always bears a certain risk when you buy at a high. And as you mentioned, it's really much the question, what's your time horizon? In the long term, I think that you can always buy gold, and that's definitely where the institutions and central banks are coming in, who are not really concerned about short or mid-term fluctuations. They know, okay, we are going to hold it the next 50, 100 years, whatever. But for retail investors, you really have to ask yourself, okay, is that the kind of investment that bears the most like risk return, or the best risk return ratio, or are there other investments where I can enter and get a better return, get more stability? Because you really have also to think about back in 2011 when gold hit an all-time high at 1980 or something. It came back 45% to 50% until 2016, and then it started to go up again. So
Yeah.
you really need this kind of emotional strength to stay through such periods.
Yeah, and have that, I guess, that time horizon perspective of what I'm investing in. You
Right.
know, am I 20 years old? Do I want to have a certain portion allocated to gold, and I'm going to hold it for the next 40, 50 years?
Right.
Or, hey, you know, I'm 10, 15 years into retirement, and, you know, maybe I already have built up gold. Do I really want to buy it again?
Right.
You know, what are you looking at? What is the time horizon? Or am I buying gold for my next generation to pass on to them? You know, I think the time horizon is definitely a big one. And that comes to investing in general, is understanding your time horizon and what the goals are.
But it's not only buying it, it's also the time of sale.
Yeah.
That's oftentimes I observe that it's almost more complicated or difficult to make a decision to sell an asset after it has appreciated so much. I talk to people, they now believe it goes up to 5,000 US dollar. Whether it will happen or not, I don't know. Whether it will happen within the next 12 months, I personally doubt it, but maybe it does.
Yeah.
So I don't have a crystal ball, but it's really also about the allocation of your assets, whether you allocate 5% of your total or investable wealth, or whether you allocate 20%. That's a huge difference as well.
Yeah, absolutely. Is there anything else on your mind that you think is valuable that we should talk about today?
I think what is also interesting is staying with the gold topic is the US dollar. The US dollar in the last quarter of 2024 has appreciated by almost 10%. It stayed strong this year, and there it's interesting to see the gold, even so US dollar is so strong, has appreciated more than 10% already this year, and it will be interesting to see where that goes.
Yeah, it's definitely interesting. I mean, especially when you see, you know, the Treasury, the Fed still has interest rates high.
Right.
So there's still good earning potential still in your Treasury bills, or in kind of these long-term debt instruments, or even medium debt instruments and short-term debt instruments. So that is fascinating to see, again, that, you know, gold is staying relatively high and moving higher.
Right.
The US dollar has continued to be strong, which, you know, is something I was expecting for it to begin to dissipate. But like you said, we don't have a crystal ball. You know, it's looking at what's happening. And I think as long as interest rates stay high, there's going to be some persistent strength. I think the interesting thing that I always like to look at is, okay, what's the long-term picture with the US dollar? Because certainly last quarter of 2024, we saw a strong movement from the US dollar. But if you just drop 2 years ago, the US dollar is still roughly 10% down from where its high was 3 years ago.
Right.
And so, you know, what's your perspective? What's your, again, looking at time horizon, you know, yeah, maybe if you exchanged 6 or 4 months ago, you might be in a tough situation. But over the long term, you know, if you were thinking about this 20 years ago, 15 years ago, you're still in a pretty decent position, which is something that's interesting to see, that long-term devaluation of the dollar despite momentary upticks, you know, whether that be 6 months, 8 months, even a year. If it holds that strength, where is it moving long-term?
Perfectly said.
Yeah, so with that, it was great. I guess we're going to be done for today. thanks for those listening. We look forward to recording this in a month, which is the update that we'll be doing this monthly, not just 6 weeks. So follow along monthly.
Likewise.